Last month, predicted we're gonna have 0.75% rate hike. It happened. Finally, I was right. For once. Hi everyone, and welcome to Reality Check, where we discuss what's happening in Toronto's real estate market, where it's going, and help you make informed decision buying or selling. Before anything else, make sure to subscribe, like, and share with anyone you think they would find this information useful. I'm here with Devin Zito, my co-host, and what we're gonna talk about is the stats for the month of August. Last month, predicted we're gonna have 0.75% rate hike. It happened. Finally, I was right. So for once. Let's hopefully in October we don't have any more rate hikes. But so right now we're sitting at 3.25% rate for Bank of Canada, and prime rate at most banks are sitting at 5.45%. So I mean, like, the cost of borrowing is rising, but again, we got different options for people. You know, you can do variable fixed, you got to talk to a mortgage broker, but how does this actually affect sales and prices? So, Market Watch, what's happening with the sales volume? I mean, I want to go through this whole chart that we have, and this clearly shows where we started the year and where we ended by the end of August. I mean, let's go through the sales. Last month in July, we had just over 4,900 and that was the lowest of the year by far. And actually last July was the lowest number of transactions for the last 20 years. Right now, we're up to over 5,600. So sales are kind of increasing. Yeah, and go back to this active listings by the end of the month. At the end of the month of August, we had 13,300 active listings. And as you can see, we started at around May with over 15,400 active listing. June, that went up to over 16,000. Then we came down to over 15,000 again, and now we're at over 13,000. So what that shows is that the active listings are actually dropping, which is a good thing, because we don't have people that actually need to sell. If someone's not getting their prices, they're actually bringing the product off the market, and the sales are increasing. And this is why we're not seeing that crazy built up of inventories that would lead to higher months of inventory down the road. So with that being said, like, the average price right now is sitting at $1,079,000. So $1,079,000. Last month we were sitting at $1,075,000. Yeah, just close to $1,075,000. So prices, we had 5 months of consecutive price drops for the last, from April all the way to July. August, it actually went up. So are we seeing the bottom of the market? We need to find that out. Just before we actually go into average prices, I want to talk about the active listings. A lot of people are confused with the concept of what the active listings means. That number that we talk about, that right now at the end of August, we had over 13,300 active listings. I mean, at the end of the month, how many active listings were on the market that people could choose from? So rolling into September, that number could fluctuate, and then at the end of September, the last day, we will see how many active listings are still sitting on the market. So that's where the numbers are coming from. And in terms of sales volume, from the first of the month to the last of the month, what has sold in GTA?
And because it's down from last month, that would mean that
less homes are on the market.
That things are happening, that sales are actually healthy and strong.
And you actually mentioned that, I mean, last month when we were talking, you talked about the fact that you were seeing multiple offers, you saw more movements as opposed to July, because July was really slow.
We were really looking at the numbers, and I said, but I'm feeling it different. I don't know if you guys remember that. And so that really translated into the numbers that we're seeing here. So good on us for predicting that.
So I mean, like, we're in the field, we see it. And again, we're going to talk about what's happening right now at the beginning of September that we're recording this, and what we think is going to happen with the interest rate hike. Let's get into the average prices. So we had the craziness in February. $1,335,000 was the average price. We gradually came down from there. And as we can see in this dot graph, the low in July was $1,074,000 and change. Let's call it $1,075,000. Now we're up by about $4,000 to $1,079,000. So the average prices in each area is performing differently. And the reason for that is the supply and sales of homes that is really affecting the prices. So in York region, prices are performing differently than what's happening in downtown Toronto. And within Toronto, for example, we have Bayview and York Mills that got a huge supply of homes, not a lot of sales. Again, downward pressure there. While we have an area, let's say beaches, Leaside, due to the lack of inventory, the prices are actually going up. So averaging it up, we're actually higher than what we were in July. Let's talk about the detached segment in York and Toronto, and then compare it to condo segment.
Yeah.
I mean, you're looking at detached areas in York and Toronto. What have you been feeling in different areas?
I feel like people are always buying detached for primarily their home, right? So things are happening differently in condos and detached because you don't have a lot of the investors that are, going to purchase homes. Yes, they do, but it's traditionally more, they lean towards the condos, right? So,
and there's a reason for that because the prices of condos are more affordable and the rents are pretty good right now. So let's look at right now the detached segment in Toronto. The average price of a detached right now is sitting at $1,648,000. We're up from last month. Last month it was $1,515,000, which was crazy because that was the lowest I've seen in years. I mean, not years, in the last, I would say like 6-7 months that we had. So we have the graph here. We can clearly see it peaked up at around February. We went down in July to $1,550,000 and we're back up again. Is it gonna go further back up? We gotta find that out next month, especially with the rate hike. But this graph shows that, there's so much a product type can go down before finding its bottom, or people actually saying, listen, this is affordable, this is what I need to buy, and they actually make a move on it. In York region, the same thing. We see the peak up here at around February, January. Things slowly calm down. So the average price of a detached in York region actually is sitting at around $1,313,000. We're down about $7,000 from month of July. That was at $1,320,000. So the actual rate of drop for prices in New York region has slowed down because in 1 month we had about $300,000 drop, and right now we only have $7,000 drop. So things are kind of flatlining and kind of normalizing to where it should be, and that's where people actually can afford to buy. So talking about the average price of condos, I mean, that's a more affordable product. Toronto is sitting at $737,000. We're down from $744,000 in July. And that's a 7 consecutive months of price drop for condos. And the peak of the market, I think we're sitting at, how much was it? $822,000. And that was in February. We're sitting at that. And now the average price is sitting at $737,000. That's about $85,000 drop in prices. Pretty good.
Which is really good. Really, really good. Yeah.
And makes it more affordable, especially to offset the higher interest rate. So, we saw a chart. We have it. We're going to put the link there. That shows the payment for the lower price condos right now, even though it could be the same for the higher interest rate, you're purchasing it at a discount. Off the get-go, you're getting $85,000 discount. So that is more affordable. You're going to be carrying less of a mortgage. In York region, same situation. Again, 7 months of price drops. And right now we're sitting at $656,000. So July, the average price was $660,000. August, we're at $656,000. So the drop is becoming less and less. And at the peak of the market, which in York region for condos was in March, the average price has dropped by about $100,000. So York region usually tends to see higher peaks and higher lows. So this is why we see this. But again, for condos, the drop has been $100,000. For detached is over $400,000 in York region. So now on to the next segment, months of inventory. I've always said it, I'm gonna say it again. So months of inventory, what it means is that if no other house was to come on the market, how long it would take to sell the existing supply of homes. So right now we're talking about over 13,000 homes. How long would it take for it to sell? And we have the exact number.
We do.
What's the number?
So right now we're hovering at 2.36 months of inventory. And that's down actually from last month, which was 3.12. And remember how we were talking about a balanced market, and we really almost hit that, which is the 4 month of inventory. Yep. And we don't really get into a buyer's market, which that is kind of where we were gearing towards, but now we're really back in a seller's market.
Yeah, but I mean, like we talked about it last month. We saw the inventory building up, and I was actually mentioning I would be surprised that we hit over 4 months of inventory, because then that would be buyer's market. And it actually went down. And the reason for that, sales went up, active listings came down. So because of that, now we have just over 2 months of inventory. That means like that 13,000 homes.
Things are still happening. Things are moving.
Things are moving. That 13,000 homes at the end of August, it would only take over 2 months for the entire supply to sell.
So historically, August is a little bit of a slower month, and things traditionally pick up in September. But as Nima just mentioned, with the interest rate hike, we were expecting things to be a little bit stagnant this week. So we had that. We had the back to school as a factor.
September usually, September, October, those are the fall market and things start to pick up. Since pandemic, 2020 August was the craziest August in the history. 2021 August was still pretty good this year.
I mean, those 2 years just were insane.
And that was because of all the lockdowns. Things would open up, people would start their activity. Right now in September, however, what we noticed was, leading up to the long weekend, things were still happening.
Yeah.
But people knew there was an interest rate hike coming down the pipe. And in September 7th, with the announcement,
things were still happening, which was very interesting because I was expecting things to be really slow, but they weren't.
Yeah, but it's still the few days before the rate announcement from the long weekend, everyone kind of stopped to see what's going on with that. And with that being said, leading after the interest rate hike, usually we have 2 to 4 weeks of lower...
An adjustment period, right?
Adjustment.
People are kind of digesting it, they're mulling it over.
There's lower activity happening. So that is given. So it would be interesting to see how it plays out for September, because we have the interest rate hike on September 7th. Let's just give it like another 2 or 3 weeks. So things could be slow. But is it?
I don't think they're going to be slow. You see, I'm from the train of thought that this is September, October, November. Those are really the strong months, right? Yeah. We will end the year really strong. December might be a little slower, but last year, December was insane.
Well, yeah,
so who knows?
The whole COVID situation messed up all the months.
Right. But we have immigration. We really always have a supply issue.
Well, yeah, there's a supply issue, and going back to what you're saying, the fundamentals are there, and that's why I don't think we're gonna see much what we saw in terms of price drops since February. I don't think we're gonna see that again, and I'm gonna talk about it in the news because there was a crazy headline out there. But with the fact that the immigration is still happening, we got the lowest unemployment rate historically in Canada. People can still afford to pay the higher payments. We're not gonna see prices drop off much more than what they have right now. What I could see is maybe like another 5%. I don't see a further drop. But again, there's two scenarios. Either things are gonna plateau and sales start to pick up again for the next few months, or it could be the doom and gloom that people are saying, it's gonna be a recession and no one's going to be buying any homes, which, again, I highly doubt it.
Well, the economy doesn't feel like... I feel like the economy is still really strong.
Yeah, it's pretty...
As much as people think we're gearing towards that recession, which I do as well think with inflation and whatnot, but you still feel the economy strong. So I think a lot has to happen before things really change really drastically.
We also had that stat also that came out that said by 2030, GTA is going to be housing about 600,000 new people. That's about 75,000 people per year. So these people are going to need a place to live. So with that being said, again, fundamentals are strong, and I think there's going to be a good demand. And if there's going to be a further price drop, people are going to still be out there buying things because they need it. It's not all based on speculation.
And also, I want to put this in there, timing the market. Oftentimes people try to do that, right? And they want to buy at the very bottom of it. But you really can't time when the bottom is until things come up. So you kind of missed out. Like he said, condos were down 85,000. Is it a good time? I'd say so, right?
It's a good time whenever you can get in there.
How much more do you need to save in order to be ready to make that plunge?
And that's exactly what's happening right now. A lot of people are seeing these lower prices and they're still jumping into the market. That's why it's holding its price, and that's why we saw an uptick in the prices. So now let's go to the next segment, the news. So, there's been a lot of news. So we have the interest rate hike. We talked about that. We'll see the effects of that hopefully in the next couple of months, see how that's going to play out. You got the next rate announcement in October. We'll see what happens. I think they're not going to increase the rates. And if they do, it will be 0.25. I don't think there's going to be any more of the 0.5 or 0.75 happening. The other news that was making a lot of headlines was a report by TD saying there's going to be 25% drop in housing prices by
Do they
the
have a
beginning
timeline on that? Like
Yeah.
for by when?
by 2023.
Okay.
But one thing that was misleading
So like
is that
literally in the next 3 months,
Yeah.
prices are going to come down 20%.
so that's
That
what
sounds
people
a little crazy.
25%. So that's
Yeah.
what people actually thought that in the
like
next
10%
3
a
to
month.
4 months, because
Yeah.
it said by the first, and in the report it says by the first quarter of 2023
Okay.
that the prices are going to come down another 25%. But that's not actually what the report said. So I'm going to read the report here. So this was actually published in Global Mail Financial Post. They were talking about in CTV, CP24, all these media where they were talking about this when this came out. And what it says is that reports suggest the average price of a home in Canada could fall between 20 and 25%
Could being the keyword.
from its peak earlier this year. So
Which
the
was
peak,
February,
which was
depending-
February.
yeah.
Right now, from February till now, in most segments of the market, we've already seen the 20% or 25% drop. I mean, see the condo market we just talked about?
And when you say drop, keep in mind how things appreciated last year. So really it just got back to normal.
That's exactly another good point because the prices actually went up within 60 days from January to February. They were up in most areas 22.5%. So now they've come back down. So it doesn't say that from this point on it's going to fall down 25%. It says by the next quarter. And we're definitely going to see headlines happening next February talking about how the prices are down 20%, 30% or whatever, because February over February, last February was nuts. So overall, there's 20% drop till now. We could see another 5% easily. I mean, like we just had the interest rate hike by 0.75. They usually increase it by 0.25. So it is 3 times the normal amount. They've increased it. So I don't think anyone should be worried about, okay, we're going to have another 25% drop.
That's why you guys got to watch these, because what you hear in the news, we really try to debunk and explain, right?
Exactly. So again, you see stuff like this, reach out to us. One thing to keep in mind, kind of let's say the opportunities are out there. You're getting a lower price on majority of the products you were paying much higher on, even though you're paying more interest. But still, you're getting a huge discount off the bat. You're carrying less of a mortgage. And if you're buying for investment...
If you're cash heavy, though, you're not really that affected. It's really a great time for you guys.
Even if you're not, the rental rates have gone up. So it kind of offsets if you're buying for the investment purposes. But again, case by case is different. Each product type and each area is different. So guys, that's it for today.
If you found this information useful, guys, please reshare it. Don't forget to like and subscribe.
Have a great day. Bye-bye.